There's two things going on here. There's one which is a philosophical view, and we can agree or disagree about whether the Fed should be stepping in and what the long-term ramifications of the Fed stepping in are. Then there's investors out there who are saying, and clearly the market is speaking, whether it's right or wrong, and saying the Fed is there. It's not, they're not debating whether the Fed's there or not, and they're saying, you know, while the Fed is there, that the right decision is to be in this market. What do you say to that? Is that right? Is that wrong?
So I tell people, as I said with you last week, I understand people who bet on moral hazard. I understand people who bet on the Fed backstop. I don't do it. I don't think that's a good way to invest. I'd rather invest on the basis of fundamentals. But I understand that. And the question is really not to investors. The question is to the Fed. Why has the Federal Reserve continuously conditioned markets to expect them to step in and repress any volatility? And isn't it time to stop doing that? Because you end up not only undermining the system itself, but you undermine the credibility of an institution that is critical to the well-being of this and future generations.
So the question, though, is, can the Fed bridge us, right? That's really the question. And really, how long does that, you know, hopefully it's not a bridge to nowhere. Can the Fed bridge us through this period? Because if Powell were to come out today and say that it was changing its approach, you know, just as we're trying to recover here and just as we're trying to reopen, I imagine we'd have even bigger problems.
We would. I mean, we are now increasingly in a lose-lose-lose situation for central banks. You lose if you try to undo what you've been doing for the reason you've cited. You lose if you try to do more, and that's what markets are pushing. Markets are pushing for negative interest rates. Markets are pushing for yield curve control. Markets are pushing for even stronger forward guidance. Why? The markets are functioning fine. Valuations are very high. Access to capital markets is not an issue for companies, and yet markets are pressing for more and more. And you also lose if you don't do anything, because you have this massive disconnect. And that's the consequence. Now, what do? You focus on people. Andrew, we have done a great job restoring market access. We have done a great job opening the markets for bond issuance. But companies are laying off people, and we haven't focused on people. The Main Street program hasn't gotten off the ground yet. So I think it's really important to change the mindset. Realize that the support of markets and companies, as important as that is necessary but not sufficient. You need one more thing, which is access to people. Otherwise, the social elements will start impinging on the economic elements. Look, I don't support the looting. I don't support the violence. I think it's awful. But I think the peaceful protesters have a point in saying, look, it's about opportunities. It's about inclusion and participation. And unless we take that seriously, this economy is going to be so imbalanced that it's going to be difficult to produce high economic growth.